Hello everybody, this is Toni Turner and welcome to the Market Now as of about noon Eastern on Friday, February 15th. Well, U.S. stocks are gaining ground again so far today, led by a bounce in shares of financials, as investors are optimistic about the ongoing trade talks to resolve a bruising tariff dispute between the United States and China. Talks between the world's largest economies will continue next week in Washington, with both sides declaring this week's negotiations in Beijing making good progress. And now let's go on to three charts that could give us some insight into the week to come. First of all, we are going to do as we always do. We're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. Now in Tony's Market Club this past Monday, one of the members asked, is it true that many stocks will follow the S&P 500 higher or lower? About 75%, he asked, is that true? And I said, yes, it is true. In fact, we like to say that during up periods or bull markets, 3 out of 5 stocks will follow the S&P 500 higher, while in a downward market, 4 out of 5 stocks will follow the S&P 500 lower. So that's why we put stock in knowing where the S&P 500 or its colleague, its derivative, the S&P 500 SPDR, it's why we watch it so closely, because as it goes, so does most of the rest of the market. So let's get started. In looking at this chart today of the SPY, we know that since December 24th, which was right down here, Christmas Eve day, the benchmark melted down to lows at about $234 or about $23.40 on the S&P 500 itself. Since then, it's rallied in a really nice uptrend, although a pretty steep one. And we can say here, when I captured this chart today, the SPY was trading at $276.38, or about $27.63 on the S&P 500 itself. Now, if we look back, it's not on this chart, but if we do, we can see that the market opened on January 2nd of 2018 at 268. So just over a little over a year later, we have returned to being positive from where we started, again, just a little over a year ago. Now, right now, the SPY, as you can see, is trading above the 50-day moving average, the green line on this screen, that's coming in at $261 and change. It's also at a premium to the red line, the 200-day moving average, coming in at about $269. And just today, again, it's above the 200-day moving average, the long-term moving average, which is coming in about $274. So this is all good. What we do have here is price resistance at 280 or 2800 on the S&P 500 index. So we're gaining, we're getting close, we're just about 4 points away from that. And the question, of course, is, can the SPY climb back up, jump over the 200-day moving average, jump over, well, it's already above the 200-day, excuse me, right now. I should have said stay above the 200-day moving average. And can it move up? And the last 3 times that price got to 280 here, or 2800 on the S&P, it hasn't been able to climb above that level. So that's posing some potentially strong resistance here. Now we have to see in the coming weeks, can the SPY move up and over this 280 mark? And you know, if it can and if it keeps going, that certainly will take many stocks higher. If, however, it has to rest, we do have support here, if this line would draw, right about 262 to 260. We have support. So could be it needs to, this line won't draw, could be it needs to move back and forth, maybe trade in a range here for a little while, unless we have the buyers to move back up over 280. We will note here that the 14-day RSI is back just about in overbought territory, so we'll have to see just how strong just how strong the SPY and the S&P 500, can they remain this move up? Now, I have to say I'm impressed. I wasn't sure that all of this move up could happen as neatly as it did. I'd like to stay impressed, so let's see what happens next week. Okay, our next chart today is the Invesco QQQ. As you all know, this is the ETF that closely follows our Nasdaq 100 index. Of course, this is where all the big dudes live, the Microsoft, Facebook, Amazon, Alphabet, and so forth, Netflix. It's a very important index in the market, and it certainly did lead in 2018. It was very, very strong, actually, in most of the bull market we've had nearly for the last 10 years. Now, like the S&P 500, the QQQ fell down to its lows on December 24th at $143.46. It held these lows, then, like the SPY, began to rally, and it's moving back up now. Again, just today it popped over its 200-day moving average, fell back down a tiny bit, and is now trading at $171.16. Now, it was barely atop the 200-day moving average a few minutes ago. Now it's just down below it a little bit. As you see, we have resistance coming in here at about 172 from this line here. Then we have more resistance coming in at about 175, 176, and then at 177. So that resistance could be strong from these prior highs, but they're relative highs, and each one is just a little bit lower. So be interesting to see here in the coming week if the QQQ can manage to continue higher. We do see this triangle line coming down here. We do see that, and we do see that price has broken above that downward sloping trend line. So just could be that the QQQ is strong here, but maybe it too needs to relax a little bit in the coming week. It is trading at a premium to its 20-day moving average. That ought to offer some support here, as should about 166 on the price support right here. So we're kind of in a, can we keep going, or do we need to take a breath here like the S&P 500? And again, we'll know next week. But it is a positive market, and that's a good thing so far. Okay, our final chart today is a daily chart of the SPDR S&P Retail ETF. The symbol is XRT. There are 95 holdings in this ETF. The top components are Ollie's, Five Below, eBay, Ulta, Lithium Motors, and again, there are 95 holdings in this. Way back in August, back here, it made a high of $52.55. Since then, it fell like every other index down to December 24th low right here of 38.10. That's quite a percentage move to the downside. Since then, it has climbed back up, started consolidating in January, and has been making little tiny higher lows in the XRT, little tiny higher lows in this consolidation period. We actually, some folks in the Toni's Market Club own this right now. It's staying above its 50-day moving average. It's now back above its 20-day, the red line, and it's looking like it is breaking out of this consolidation period right here, which is a bullish move so far. If I had a wish, I'd wish for a little stronger volume in this move, but it did jump right up today, and of course the good news between U.S. and China and the tariffs will tend to prop this up. Today, when I captured this chart, the SPDR S&P Retail ETF, the XRT, was trading at $45.33. So I'm going to watch this into next week. It is breaking out here. If it continues to stay positive, I may add shares to my trading portfolio with my initial stop as a close below the 50-day moving average, and right now that line is coming in at $43.15. Now, if it stays positive and it continues higher, I'll adjust my stop into a trailing stop. as or if it begins to move back up toward its 200-day moving average. Maybe find a little resistance there, but it's that line is horizontal now, so it shouldn't prove too much of a problem if the economy remains strong and if retail remains strong. So you may want to keep an eye on the XRT next week and see if it's something you want to participate in. And now for the next week's economic reports, but first, please join us this coming Tuesday, February 19th, for our next session of Toni's Market Club. We normally hold Toni's Market Club each Monday, but the market is closed this coming Monday for President's Day, so we're holding Toni's Market Club this coming Tuesday. If you're not sure how you can make money in the market right now, please let us help. In our weekly trading sessions, we talk about which side of the market to trade and what to watch out for, and I'll give you stocks and ETFs to trade along with entries, protective stops, and profit targets. Toni's Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, please go to tonysmarketclub.com. Economic reports next week, not much going on Monday or Tuesday. Wednesday we have building permits, housing starts, and our usual crude inventories. Thursday we have jobless claims, the Philly Fed Index, and existing home sales. Not much going on in economic reports on Friday. Again, join us for Toni's Market Club this coming Tuesday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.